Hey traders, Nick Shaheen here looking at Twitter. So today they got shellacked. I don't know why exactly. I know some sort of a political move that they tried to pull against the president and his fans. So a little background. I grew up in an oppressed country, so freedom of speech, freedom of opinion, freedom of beliefs is really big on my plate. I don't care what you think. I just care that I'm allowed to think it in the U.S. This is changing. Now I'm going to say something a little bit political, not political, opinionated. I don't like it. I don't like the change where we're forcing everybody to think the same way, otherwise they're evil. So it's as simple as me putting a flag on my front lawn immediately makes me a hater of something. I don't know when that happened. We should be proud to be Americans. It's a great country, regardless of what people tell you. You should go live somewhere else and see how great this place is. With all its faults, it's not perfect. But I've lived in several countries, and this by far is my choice. So Twitter, I don't know what they're doing or what they said or what happened overnight. I'm strictly going to concentrate on the chart. What is the chart telling me of this particular ticker? If I'm long, do I bail? If I'm not long, do I buy? So a few weeks ago, I shared a bullish note on Twitter with friends, and it was a long-term commitment for this year, saying, hey, they just bought something that could be Zoom-like feature. Maybe finally they'll start monetizing their user base. So maybe I want to hold them long for the whole year as a surprise pop, like a complete upgrade in income statement months down the line, nothing imminent. So if I haven't done that yet, this would be the opportunity to do it. Why? Because from the chart perspective, this is a daily chart. It should be about a year. Yep, a year's worth of data. To orient us, this was the debacle of COVID, the pandemic, the closures. So we recovered it, and then we used it as a base. So now I have several bases. And let me see here. I was showing some people. Somebody took this is the small caps, a spread here. So who do you think is smarter? The buyer of this call spread or the seller of this call spread expiring this week? If I were to take sides, I'm not going to take sides. Anyway, that's besides the point. We're discussing that in the chat room. All right, so chat room link is down below. It's not free to be in the chat room because we do a lot of great work and we put a lot of effort into it, but it is free to try it out. So click on it. It's a PayPal transaction for $0. And you have totally 10 days to totally blow it out. So this was the debacle accident scene of COVID. And notice how this is this orange line. I didn't draw this. This is the actual point of control. From the volume perspective, this is where they traded it the most. This is where all the action happened, right here, by far. Okay, so if it collapses, this should be support in worst case scenario. Now, on top of that, now we have levels to talk about. What is this, right? So this is a level of interest. Kind of a same thing here. We have a zone of interest right here. So if I were a guessing man, if I got long here, I don't panic out here in this zone because the damage is done. If I woke up and boom, it's down here, it's too late to panic out of it. Now, why would I want to get out of it though? Because if it fails here, then it could do something like this and there's more damage coming. So that would be where I have to stop myself out. So as a trade, if somebody is looking to invest in it, it's not a bad place to try to buy the dip at the bottom today, or maybe give it some time. Now, mind you, it has to trade within the whole market. So if the whole market is somewhat extended and we are at all-time highs, and if we hit up another pothole, let's say somebody fires a shot on the street in the United States. It's not that far off, people. I cannot believe what I'm reading in the news. It's just insane. So it could happen, but it has to trade within the whole market. So if the market has a tizzy, then this one will have a tizzy. I haven't looked at their fundamentals in a while, so this is a good time to do it. So from 2016 to the trailing 12 months, they had about a 600 million increase in gross profit. Revenues, okay, about 900, 0.9, so that's good. Decent, not extravagant. They're losing a lot more. So they haven't made any headway in profitability, which is fine. If it's a growth company, I don't want them to be profitable. But are they a growth company? What's growth? Is it growing the user base? I don't think they're growing the user base. They're losing people left and right. I use Twitter all the time. and I've used it less and less and less, and I follow fewer and fewer and fewer people. I have like 10 followers. I mean, I follow like 10, and some of them are friends, a couple are news agencies, and I have about 4,000 followers. So it's the balance. I used to get a heck of a lot more impressions. So I don't know what they did. Maybe they threw out a whole bunch of fake people that were following and retweeting and all of that. Maybe bots. But the growth is not in the user base, I don't think. And is it growth in the money? Maybe a little bit, but definitely not in the bottom line. So this is where growth is it a growth company or not? That's important to know, because let's see how it's priced. Price to sales is 12th. So who else is priced at that level? I think Apple is there, Facebook, not Amazon. Amazon is less than half of that. So this tells you, why am I paying a premium to own this turd versus Amazon as far as growth is concerned? Excuse the language there. So I love the platform because of the way it delivers news to me. I read the headline, I like it, fine. I don't like it, I swipe it, it goes away. I don't have to read the bulk. I just want to know what's going on in this world. I don't want to read the opinions that are being fed to me. So if I follow Reuters, it doesn't mean that I think the Reuters opinion is great. It means that, hey, Reuters will deliver the headline. Same with Zero Hedge, for example. I can't stand what they write or on their website, but they're amazing delivery of news, like headlines. Nobody gets them faster than them. I don't know how they do it. Maybe they create them. I don't know. So I use Twitter. I'm not a hater of Twitter. I would buy it here for a trade. If I'm long and I didn't get out, I would wait to see what happens in the next couple of candles. It's too late to panic, and they're still at the bottom end of the trend. So from a trend perspective, it's not bad. So if somebody is a faster trader, they need to look closer. So this is a 2-hour chart. And right here, I can find that 45 is important to hold for a lot of reasons. It was a lid, it was a base, tested, and now it got tested hard today. So let's zoom in a little bit closer in time. What's important to know is who's in charge. So here's what I see here. If it pops to 50, 51, and I'm long from 48, I would scalp for a trade, because this is where the danger rate could fade, because it's going to find sellers up there and then do some sort of a head and shoulder-ish pattern. I know it's not quite because of this tail here, but that's the resemblance. So if I go to 30-minute charts, so definitely the sellers are in charge. The machines will sell it as it approaches 50. There's no doubt in my mind. What happens there is a question. What happens at 51.8 is a question. What happens at 53 is a bigger question. So if you want to write down these values I just said, those are the points that it might falter. So at 54.5 is a big problem because of that orange line. Again, that orange line, I didn't draw it. It's automatically drawn. This is where they traded it the most for this period of time. It's not a lot of time, but it is a heavy volume area. Like when it come to it, when price comes to it, if I'm long, I would book. That's me, if it's a trade, because it's going to find a lot of supply up there. However, once they take it out, if they take it out, then it becomes a nice trigger. So here's how it happens if somebody wants to look out for it. If somebody's optimistic about it, today is the 11th. Did I say that already? So there's going to be a battle here, and then let's say the bulls win all these battles, and they come back up to here. I got to work my way out of the picture. And eventually they're going to come here and they're going to fail. And they're going to come back again and maybe they win again. So now you have some sort of a bunch of shoulders and then the head and then a whole bunch of shoulders. And eventually they take this out. Now you've got this much opportunity upside. But you have problem, places to scalp on the way up. So it all depends on how fast you're trading. So are you faster than this? Then you're looking at the 5-minute chart. Now I have a trigger. Look at that. I do have a trigger at 49.50. I don't remember when I put that. Maybe it's today. It's been a busy day. I started my day out in UCLA Hospital. So yeah, rebuy. So there's a big gap here. They filled half of it and they failed. And now if they come back and trigger above that, then they can make headway. They will find 50.45, 50.5. They're going to be resistance. So to fill the whole gap is going to be a lot of trouble. Okay, the sellers are in charge, so the pops are being sold. Keep that in mind. All right. I think that's all I can say about Twitter. Trying to look at it from a different perspective. So long term, I started a thing saying I'm optimistic for it long term because I want it to do well. So up here, it was not an obvious point of entry. I remember when I shared the long bet on it, it immediately popped and it went really, really green. And if somebody sold calls against their longs, then they made money, locked some profits in. On this dip, now they're fine. They can sit it out and wait. So, okay, let me show you the upside scenario if somebody wants to be patient. So this is a monthly chart, really slow-mo chart, right? 2014, from inception. Let's say it failed here, right? So this, I said supportive. So if they do this, however they get back here, now we have something exciting. We have a whole bull, whatever, rounded bottom. It's a tough time that they recovered from, went to a failing point, a tougher time for such a long time. Failed here. Such a long time. Boom. They hit a wall and now they're failing. Let's say this swoon does this and they come back to it. How pretty is that? Okay, but I say no trigger, no trade. So if it doesn't beat this, I don't chase that. That's my opinion. So if I wanted to do this ahead of time, I would use selling puts and put spreads. How does that work? I sell risk down here in order to be long, leaving room for error. If you don't know what that is, join the group. I'll explain it to you. But I'm not going to give a lesson out here. All right, Nick signing out.